talk money. What is capital? Guys, when I first started investing in a stock market, I ran into two major barriers. One, capital, and two, the language barrier that they use on Wall Street. Wall Street has its own lingo, has its own jargon. Wall Street is its own entity in of itself. Okay, like look at this ticker symbol right here, AAPL. That's the ticker symbol for Apple. Look at this. These are little definitions and terms that will allow you and help you to understand what this company's finances are. But if you don't know what a PE or a forward PE or a PEG or cash to share or book to share or dividends, you wouldn't know really what all these numbers are. I always say there is knowledge in numbers. I do believe just by figuring out what the definitions of these terms are will allow people to better understand how to evaluate companies when it comes to investing in them. Okay. Have you ever read a 10K? Have you ever read a 10Q? If you have, or if you listen to a conference call, you're going to see and hear about a lot of these different terms, a lot of these different terminology may be used on those calls or when you're reading it. You can't get away from this jargon. So in this series, I would actually like to go over definitions that keep people from investing. Definitions that will make it simpler for people to understand what is going on with this stock and what are these people talking about when it comes to evaluating this company. What is capital? Definition. Capital refers to the assets from buildings to machines to cash that a company puts to work to make money. This same definition can be used for individuals. So let's reread it. Definition. Capital refers to assets from buildings to machines to cash that a individual puts to work to make money. Understanding capital. Capital is the lifeblood of wealth creation. Combined with labor, capital can be put to work to generate a profit for a business investors. Capital includes assets that a company uses to generate income, such as real estate, computers, equipment, and vehicles. Capital differs from money, which can be used to buy capital, but also anything else that's for sale. A company's working capital is the difference between its current assets, those that can be easily converted into cash within a year, and current liabilities, debts owed within a year. Companies need sufficient working capital to stay in business. Firms often raise capital through equities, selling shares to investors, or debt, taking out loans or selling bonds. Example, a McDonald's franchise employs capital and labor to make profits. The restaurant's staff makes up labor portion. The capital includes the restaurant's buildings, equipment, everything from deep fryers to cash registers, and working capital, cash, used to buy ingredients to pay employees. Inventory such as frozen hamburger patties and fries are also part of working capital. Without capital, the McDonald's would not be able to generate wealth for its franchisee owners or the corporation collecting franchise fees. Takeaway: capital is like yeast. You need capital in order to put labor to work. Combine raw ingredients, labor, and the yeast, capital, and a business can operate. When you invest in a company, you are helping it raise the capital it needs. Link in the description below for these articles. This is a little depiction of what they just said above. Okay, guys, what do you think about this? Are you interested in this? Do you understand capital a little bit more? Is there something else you would like me to go into? Like, subscribe, and I will see you all later.